Welcome to WealthAbility, where we're always discovering how to make way more money and pay way less taxes. Hi, this is Tom Wheelwright, your host, founder, and CEO of WealthAbility. We had a major stimulus package, as everybody knows, just a few weeks ago. The focus that everybody's been talking about is this PPP program, and it affects business, and the real estate people are going, what about us? Today, I'm going to show you 4 major stimulus provisions in the Kerrs Act that affect real estate that you must act on now. Not tomorrow, not next week, not next month. Because these same provisions that they put in the Kerrs package, we're at danger of losing some of them in the next stimulus bill. So pay attention, meet with your accountant, make sure your tax advisor understands this, that there's things you need to do today. And I'm talking about today, okay? Do not wait on this. So we had 4 major changes to the tax law that affect real estate investors under the Kerrs Act. Some of these changes will probably stay, but there's already discussion about eliminating some of these tax benefits. So here's the first one. The first one is what we call qualified improvement property. Now, qualified improvement property is simply another word for leasehold improvements, right? And we all know that what happened in 2017 is that they eliminated leasehold improvements from the biggest tax benefit to real estate. And what was the biggest tax benefit to real estate? Bonus depreciation. So bonus depreciation comes along, real estate investors are thrilled, and they leave off qualified improvement property from bonus depreciation. So instead of deducting it immediately, it's deducted over 39 years. That's changed in the Kerrs Act. So qualified improvement property, if you made leasehold improvements to your own property or to a space you were renting, you need to go back and see if you can take this as bonus depreciation, because chances are you only took 2.5% of the deduction and you could have taken 100% of the deduction. Now, this is a technical correction, so it's likely to stay in the law. It's probably not going to change. However, it's part of a series of tax benefits for real estate investors, and some of them might change as soon as the end of May. As soon as the end of May. Because there's a lot of talk in Congress, oh, we gave too much away to real estate. Well, wait a minute. Okay, real estate's been hit hard by this crisis. So regardless of the politics, just understand that we have an issue going on here in Congress where there's a fight about whether to maintain these benefits. All right, so leasehold improvements, probably staying. What's the next one? Well, the next one could be leaving us. So we need to take advantage of this. What's that one? The next one is the $500,000 loss limitation. Now, what happened was, in 2017, they changed the law and they said you can only use up to $500,000 of your business losses against your non-business income. Interest, dividends, other non-business income. So there were people who couldn't use all of their losses. That changed in the Kerrs Act. For 2018, 19, 20, this loss limitation goes away. All right, so let's say that you had qualified improvement property. Now you're taking bonus depreciation, which, by the way, you can go back to 2018, amend the return, take the bonus depreciation. You take the bonus depreciation, it creates a loss, but you couldn't use it because of the $500,000 loss limitation. Under the new law, you can use it under the $500,000. This $500,000 loss limitation is gone. Okay, it's gone for these years. So we need to take advantage of it. Now, there's a lot of discussion in Congress that they're going to bring that back. So do it now. Don't wait until, don't say, well, I'll do it, I'll do it in August. It could be gone by August. So do this right now. This is as urgent as the PPP loans. It's absolutely as urgent as the PPP loans. What else do we have? We also have net operating loss. Net operating loss. Well, what changed? Well, we've always had net operating losses. Well, now what we have is a carryback. For 5 years. A carryback for 5 years. So what does that mean? Okay, so let's add these up together. You have qualified improvement property, creates a loss. We now are not limited by our $500,000 limitation, and we have a net operating loss carryback for 5 years. That means that in 2018, you could generate a loss that you carry back to 2013. 2013, 14, 15, these were the biggest expansion years of the economy. You probably had more taxable income in 13, 14, and 15 than you ever have had. Okay, now we have the opportunity with the bonus depreciation. Now, a lot of people also had bonus depreciation just on their normal real estate in 2018 and 19, and it created losses for them. What do? We can now carry it back for 5 years, but we need to do it now. Okay, we need to do it now because if we don't do it now, Congress could take it away. They've been talking about it, taking it away. So the three major provisions, qualified income offset, probably staying with us. $500,000 loss limitation could be going. Net operating loss carryback absolutely could be going away. All right, there's one more provision. And for all of you who are going, wait a minute, none of this applies to me. This one's going to apply to you. One of the biggest challenges that I find with real estate is that people get into real estate after they've been employees for a long period of time. And as employees, they were taught, well, here's what you're supposed to do. You're supposed to get a good job, right? You're going to save money, and you're going to invest it in a portfolio of mutual funds in a 401k or an IRA. And now you've discovered real estate and your money is stuck. And so there's all these promoters out there, all these promoters that are saying, oh, you can invest through your IRA, which is a horrible idea. It's a horrible idea to invest in real estate through an IRA or 401k. Why? Because you lose all the tax benefits of real estate. We just got through talking about bonus depreciation. If it's in an IRA, no bonus depreciation. I always explain it this way. When we were kids, we were taught this equation. -1 times -1 equals +1. Real estate, from a tax standpoint, is a tax benefit, right? So we have a -1 real estate. Well, an IRA, 401k, that's also a tax benefit. So that's the IRA. And what do we end up? We end up with a tax cost. We actually take an investment that is non-taxable. And we do it in an IRA, we're making it taxable because when you pull that money out, you're going to be taxed. So what do? Well, guess what? We have a terrific opportunity in this Kerrs Act to do something about this. Here's what they did. They said, look, you can take $100,000 out of any qualified plan, tax-free for 3 years. So you have a choice. You can borrow it for 3 years and then put it back and never pay tax on it. No penalties, no tax, no interest. Or you could take it out and you can actually spread it over 3 years with no penalties. So you can take $90,000 out, pay tax on $30,000 a year for 3 years, no penalties. So you're paying exactly the same amount of tax as if you took it out later. You're just taking it out now. All right? And here's the way math works, okay? This is Algebra 101. And that is, you pay the tax now or you pay the tax later. It's exactly the same. Oh, but I'm not compounding on this. But you're compounding your tax costs too. So it doesn't work that way. People say, well, you need to leave it in because you're going to pay tax if you pull it out. That's just somebody lying to you. That's all that is. That's a lie. No different than the Wall Street lie saying you're too stupid to handle your money, so you need to give it to us. Right? This is an opportunity of a lifetime. No penalty. Doesn't matter how old you are. No penalty for pulling it out. Okay? You have to show that you have a need, but everybody has a need right now. Come on. Everybody has a need. These are uncertain times. You have money stuck in an IRA, stuck in a qualified plan, you get $100,000, no penalties. So if you want to be investing in real estate, which by the way, America is going on sale. There are going to be huge opportunities as the year goes on. Later in 2020, Q3, Q4, there are going to be huge opportunities. This $100,000, this is a one-shot deal. So take advantage of that. Take advantage of the qualified improvement property deduction. Take advantage of the $500,000 business loss limitation going away, and really take advantage of the net operating loss. I think the net operating loss is in serious danger. So again, Tom Wheelwright, WealthAbility. Anything we can do for you, go to WealthAbility.com. That's your ability to create wealth, your WealthAbility. Go to WealthAbility.com and we're happy to help at any time. Thank you for watching. Remember, when you take advantage of what the government gives you, you have to take advantage of what the government gives you. You're always going to make way more money and pay way less taxes. See you next time.